Formerly known as just Facebook, Meta, MVRS, Get Meta report stock has been getting its clock cleaned over the past few weeks. When the company reported earnings after the close on February 2nd, it was immediately met by sellers. That's despite some of the bullish responses we saw in other FANG stocks, like Amazon, AMZN, Get Amazon.com, Incorporated report, and Alphabet, GOOG, Get Alphabet Incorporated Class C report, GOOGL, Get Alphabet Incorporated Class A report. Extended President's Day sale, unlock 2 years of financial wisdom for less than $3 per week. Meta shares fell more than 26% in the next session as investors digested the report. The news even weighed on Pinterest, Pins, Get Pinterest Incorporated Class A report, and Snap, Get Snap Incorporated Class A report, the latter of which fell 23.6% ahead of its own earnings report a day later, then surged almost 60% in a single session after reporting better than expected results. As for Meta, the stock has traded lower for 6 straight weeks, and in 11 of the past 13 sessions. The stock is now down 40% from the February 2nd high and roughly 48% from the all-time high made on September 1st. At this point, it comes to growth versus valuation. Revenue is forecast to grow double-digit percentages both this year and next year. However, earnings are forecast to fall about 10%. Despite that, shares trade at just 16 times 2022 earnings estimates, a lower valuation than the overall market. For a premier social media platform with a fortress balance sheet and billions of users, bulls are beginning to feel this is too cheap to ignore. If that's the case, the recent 40% haircut can be used to one's advantage. When is enough enough? That's a question many investors have been asking themselves, and it's one they have to be careful with. All one has to do is look at growth stocks to know that it can always get worse. When I first look at the weekly chart for Meta, it looks like the selling pressure could be exhausting itself. When I look at the daily chart, Tuesday's action gave us an indecision day, interpreted via the doji candle. What I want to see from here is pretty simple: a daily doji up over $207.50. If that were to happen, and preferably in conjunction with a rebound in the Nasdaq, we could see a quick push up to the $215 to $218 area and the declining 10-day moving average. Near the latter is also a big breakout level from the past few years. Above this zone puts $225 in play, followed by $235 and the declining 21-day moving average. On the downside, $200 has been key lately. A close below that level may have short-term bulls hitting the exits, and I can't blame them. If we're near a low though, the current charts could lead to a great risk-reward setup.